Hey everyone, this is Corey with Sims Investment Management. This is another monthly market update, and I hope everybody's having a wonderful summer, had a great 4th of July. It's been a really great start to the year for the stock market this year in 2023. For 6 months, the S&P 500 is up a little under 17%. And so as we continue to recover from the 2022 drop, October would have marked the low last year, and we could certainly retest that lows later this year or next. But for right now, it seems like the market is digesting all of the catastrophes that have been thrown at it. And part of the reason why the market continues to recover is that people aren't as fearful that earnings are going to come down. And like we've talked about before, the stock market ultimately is driven by how much money do the companies make. And in any given day, the market might swing a lot one way or the other, any given month, any given quarter, but ultimately, fundamentally, it comes back down to how much do we expect these companies to make in the next year, 2 years, 5 years, 10 years, etc. And until we think that innovation is going to stop and companies are going to stop making money, the market in theory should continue to go up over the long run. This year's been pretty crazy, right? If you think about, had to overcome fears of inflation, the Fed raising interest rates, the banking crisis, mini crisis. We had a little bit of some people worried about the dollar and the strength of the dollar because of the potential default by the U.S. government, which did not happen. So there's always going to be this apocalypse du jour that the media is going to feast on. And yet through all of that, the market is up 17% so far. So pretty remarkable. Looking into the second half of this year, there is still potential that the Fed continues to raise interest rates and we do get tipped into some type of what is now being called a mild recession. But the market continues to be forward-looking, right? And I think people kind of forget that. So the reason why the market went down so much in 2022 is because, in theory, they were anticipating in 12 to 18 months, so that would be essentially now until the end of the year, that we would experience some type of recession because of interest rates going up. It also looks like maybe interest rates will not stay as high for as long as some people feared, and that we might see interest rates come down in 2024, which would also benefit companies and the economy. Someone asked me recently, why is the economy and the stock market so interested in interest rates? And ultimately what the Fed is trying to do, right, is if you raise interest rates to a rate that causes businesses and consumers to stop borrowing money, then they don't spend as much money, and thus the economy should slow down and inflation should slow down because there's not as much demand. That's the balancing act that the Fed is trying to accomplish, along with not pushing the unemployment rate too high that then they have to cut rates rapidly. So it is definitely a delicate balancing act, and we will see how it plays out over the next 6 to 18 months. Other big news here at Sims Investment Management. Last week, Connie Lawless started with us. So we are now 6 people deep. Connie has a wealth of experience. She's going to be helping some of our other advisors, Michael, Blake, and Ryan, and assisting them. Connie has over 2 decades of experience. She's very familiar with Charles Schwab, and I am confident that all of our clients that interact with Connie are going to love her. So we're really excited to have her on board, and we're also excited to just remind you that if you have family and friends that need financial planning help, or if you feel that we deserve an introduction, we would love if you would think about us, maybe even share this video and our newsletter, because we do have the capacity now with Michael, Blake, and Ryan and Connie on board. So just let us know if we can help any of your friends and family, and I hope you have a wonderful rest of the summer, and we'll catch you next month. Thanks.